Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames, and we'll also take a look at market cipher. So we're going to start here on the 2-week time frame. We did just open a new 2-week candle. The main thing I want to look at here is on the RSI. We do have this blue box drawn in at a 46 to 47 level. And this was a key area I've marked out. We can see in the 2018 bear market, we got support here before finally breaking it into the final capitulation in the bear market. We also got support off it here. And also in our current bear market, we did get some support initially off this area. Once we did break below this area, we had what I think is the final capitulation in the bear market. This lower blue box here just marks out the overall lows of the previous two bear markets. We can see we came down slightly lower here, and we are still in that range of the two previous lows in the two previous bear markets. But I've got these white dotted lines drawn in here, and it just shows the candle where we did close below this blue box on the RSI, and also when we did close above it. And I've done that for both previous bear markets here. But just comparing it on the chart, if we do go to the 2014-15 bear market, we can see we closed below this blue box, which is this white line here on this candle. And once we do close below that level, we do generally have one more final capitulation, around a 50% drop to the bear market low. And then we spend some time consolidating at those lows. Once we break above that level on the RSI, it initiates the start of the next bull run. And in that first bear market, we spent 392 days below this level on the RSI. The 2018 bear market now, we can see we broke below that level on the RSI. On this candle, we had that one more final capitulation, around a 50% drop, 6K to 3K. Once we did close back above that level on the RSI, we started the next bull run. And on this occasion, we spent 147 days below that level on the RSI. And looking at our current bear market, we broke below this RSI level on this candle when we're at around 36 to 40K on this candle. We had one more big drop down, around a 50% drop, similar to the previous two bear markets when breaking that level on the RSI. And now we are spending time below that level. And currently we have spent 84 days below that level. And again, reclaiming this 46, 47 level on the RSI will initiate the start of the next bull market. So we do see those similarities. And just looking back at the two previous bear markets, the first one was 392 days below that level on the RSI, then 147 days, currently 84 days. We could spend a while consolidating here around this lower range like we did in the two previous bear markets. And if we were to consolidate sideways here until we break this macro falling wedge pattern, and that could possibly take 140 days in total below this level on the RSI, and that would line up with around this area, around the 12th of September. And that would be a similar time frame to our 2018 bear market here, with the amount of time spent below that level on the RSI consolidating at the lows. And down to the weekly time frame, we also opened a new weekly candle here. We have been looking at the VPVR, the amount of volume traded at certain price levels. We did notice there was this big spike here on the VPVR where we have been getting this support and these bounces on these weekly candles. And that was quite a lot of volume here. This is also getting the volume from this previous price action. And we also noted that we had those weekly order blocks here from these red candles in an uptrend. These are areas of supply and demand. They're a break in a trend. There were buyers and sellers here and time spent here, and therefore volume. And these areas can later on act as resistance or support levels. So just looking at our immediate price action here, we can see how that weekly order block here did act as support on this pullback. We closed inside it and it acted as support. We moved up to the next order block from this green candle in a downtrend. And on the previous week candle here, we were waiting to see if we close above the order block or below it. and we did neither. We ended up closing inside the order block again, so there's no clear direction on this order block yet. It is pretty neutral. With our current weekly candle, we can see we came all the way up to 22.8k approximately. We have just recently pulled back down again, currently at 21.6k. These are the weekly candles. The week has only just started. So in relation to this order block, we have to wait for this weekly candle to close. And again, we're looking for a close above the top of this order block or below this order block. We do notice on this pump to the upside, we did get resistance at the 200-week moving average in red. This is a key moving average to regain. As in previous bear markets, this was the area where we pretty much bottomed out along this 200-week moving average. And as mentioned, we have this falling wedge pattern here on the macro scale. This was our all-time high. We have 2 touches on the top, 2 on the bottom. Generally with this pattern, on the 3rd touch, we break bullish. And again, we have plenty of time here where we could consolidate in a sideways range before breaking that. And that could go all the way into September. The more immediate thing we've been watching is this white dotted trend line here. It does connect to this high, and this high. And this is the first trend line we're looking to get back above to give us confidence that perhaps the bottom was in here at 17.6k. But we'll have to look on the smaller term time frames on this one, as we've only just opened this weekly candle and there's plenty to go in the week. And down to the daily time frame now. We did notice in the last video, our previous consolidation here was a rising wedge, which was a bearish pattern, and we broke down from that. Whereas our current consolidation seems to be more of a parallel channel. If we connect the overall lows here, we can see it also lines up with the overall highs here. And just looking at that white dotted trend line, we can see with our new weekly open and our new daily open, this is the daily time frame, that we did come all the way up here to that 22.8 level and above that white dotted trend line, but we have been pushed back down below it now, and we'll have to wait for this daily candle to close to see if it closes above or below it. On the next daily candle open, this trend line level will be at 21,450. We do also have a possible daily order block from this red candle, but again, we have to wait for this daily candle to close. It will have to close above 21.2k for this to be confirmed as an order block, and then this may become a possible area of support on a pullback. The other thing we noticed was if we go to the 5-day chart now, we do actually have an order block with this green candle in a downtrend. So if we just draw that order block in, again, this is on the 5-day chart, so we have to wait for the 5-day candle closes. We can see we did go above this order block. We closed above it. We came back to retest it. We didn't close below it. It acted as support, and we have moved back up again above the order block. But this candle doesn't close until the 20th of July. So there is another day of trading left on this candle. And a similar thing, if we can close above this order block, it'll show that we went above, retested it, and used it as support and closed back above it. And that would be more of a bullish sign for some continuation. The top of this order block is at 21,215. So back to the daily now. We'll leave that 5-day order block here, as it will depend on tomorrow's close. So just pulling up the EMA ribbon now, we can see it initially acted as resistance on this move to the upside, and we have been testing it again here. We did go quite high up into the ribbon here, and for the moment we're still inside the ribbon. If we do end up closing below the ribbon, which is below 20,940, that would be quite bearish, and perhaps we're going to come back down to test the bottom of this trend line again from this parallel channel. As we can see, when we did close below this ribbon on the previous time, we got continuation. The other thing we're watching is the RSI here. We have marked out a blue box in this area. We can see it has acted as resistance on these attempts to break above this level. Again, this is around that 50 level on the RSI, between 51 and 47. Where we can see where we previously got rejections from this 50 level was on this candle, and it did end up pushing us lower. The previous two rejections were on this candle and also on this candle before we got pushed back down. So it doesn't have to be the same. If we are able to close above this level, obviously that would be more of a bullish sign. And the other thing we're watching for is any divergence. We can see at the moment we do have lower highs depending on how this daily candle closes. Well, on the RSI, we are making higher highs. So this would be hidden bearish divergence if we do close the candle like this. And again, to avoid that hidden bearish divergence, we need to close above this candle body, which would be above 21,620 approximately. And we see a similar thing on the Bitcoin CME Futures chart here. Got that same falling wedge pattern and also this dotted trend line, this time in yellow, just connecting the overall highs here. And we see a similar thing. We did briefly get above this yellow dotted trend line here. At the moment, we are below it. And doing a similar analysis, looking at the daily EMA ribbon on the futures chart, we can see we are just on the cusp of it here. But I also want to look at the RSI. It is a lot cleaner here on the futures chart. We can see we've just got a horizontal trend line, and it does pretty much mark out the tops here on the previous occasions. And I've just got these white dotted lines marking those tops, and we can just see where it did line up with the previous times here. We can see it acted as resistance here, also in line with that yellow dotted trend line. We had a correction on this occasion here around that yellow dotted trend line. We had a correction, and again, we're coming up to that level again. We're not quite at it at the moment, but just something to watch out for, that in conjunction with the daily EMA ribbon. And looking at our hash ribbon indicator now, and also market cipher down the bottom here. This is on the 2-week time frame. We are still waiting for that 2-week major green dot, which did on the previous two bear markets, along with the hash ribbon buy signal, confirm that the bottom was already in. And we can see on market cipher, we are getting extremely close here. This blue wave has pretty much closed off. We have just opened this 2-week candle. So if we are able to move higher, possibly break that white dotted trend line we talked about, then that green dot will appear. And in 2 weeks' time, it can get confirmed if we do stay at those levels. We are still waiting on the hash ribbon indicator buy signal. And we're also watching this trend line here, just connecting these two overall lows. We are seeing some consolidation above this trend line. And if we just switch to the daily time frame and take a look at this trend line and zoom in, we can see how it has been acting as support on these pullbacks. And we also see how the hash ribbon indicator getting close to that signal, but it's not quite there yet. And perhaps sometime over this next 2 weeks, as we wait for that 2-week green dot to appear, maybe the hash ribbon buy signal will appear. So let's take a look at market cipher now over different time frames. This is the 4-hour time frame. We do have a red dot currently. It's not confirmed yet. We can see how we've been getting these red and green dots. We've been having these smaller pullbacks and bounces, and that's something we talked about in the previous video. We noticed the higher term time frames were still coming up with the blue wave. And we said if the higher term time frames are still moving up when looking at this blue wave, then these smaller term time frames like the 4-hour may see this choppiness with these red and green dots, and any pullback will be likely a smaller pullback and not a full correction. We see a similar thing on the 6-hour time frame with these red and green dots. So we will need to look at the higher term time frames. And the 12-hour shows what I was talking about. We saw this blue wave still coming up here. And so we see that choppiness with the red and the green dots on the smaller term time frames. And we're getting support from these higher term time frames. And so we mentioned those pullbacks would likely be short-term corrections and not a full-on correction. The 12-hour is still looking good here. We don't have any red dots present yet. We do see finally that money flow coming into the green here after being in the red since back in April. So that is a good sign for the bulls. And the daily time frame, we do still see this blue wave coming up. So we see those higher term time frames still supporting price. We are still in the red money flow on the daily time frame, and it would be good to get in the green on the daily time frame here, as we see on the previous occasion where the money flow crossed back into the green after being in the red for a long time. We had that 20% move from 40,000 to 48,000. The 2-day time frame, this blue wave is still coming up. We did get that green dot and it did get confirmed. The 3-day is similar. This blue wave is still coming up. Same with the 4-day time frame and the 5-day time frame and the 6-day time frame and also the weekly time frame. So I guess the key time frame here is probably the 12-hour, which has been pretty consistent with these red and green dots, pretty much marking out good times to enter a long on the green dot and a short on the red dot. And for the time being, we're not printing a red dot yet. This blue wave is still moving up. And with the addition of coming into the green money flow, that is a good sign for some possible continuation. And also the daily time frame's the one to watch with this money flow, hopefully coming back into the green. And this blue wave is still moving up. So we'll mainly be watching for this daily close now. If we can close above this white dotted trend line, which would be above 21,680 on today's close, and on tomorrow's candle would be above 21,440. And we'll also be watching to see if we get any of that hidden bearish divergence. And to avoid that, we need to close again above the high here from these previous candle closes, above 21,620. And then on tomorrow's close, we'll also watch that 5-day time frame to see if we can close above this 5-day order block. That's when the new 5-day candle opens. And to do that, we need to close above 21,220. Also, finally, we want to see us close at least inside this daily EMA ribbon, not to show that it acted as resistance. And to do that, we need to close above 20,910. So I think that's about all. Hope you enjoyed that analysis. Thanks for watching. I'm Bitcoin Mamo. I'll see you next time. Bye.